got it.
Thank you. 60 seconds, and we're off. Okay. There's too many monitors in this office.
What'd you say?
There's too many monitors.
It's a lot. It gets involving.
There's a lot going on. A lot going on.
I think you need another monitor in there, honestly. Just one more. 10 seconds. Here you go.
Okay. Hello and TGIF. Yes, we made it to Friday. Quite a week, but we did make it. So I want to thank you for tuning in to the Financial Chick Show today. I'm your host, Denise Nostrom, the CEO and owner of Diversified Financial Solutions, a full-service independent financial planning firm located in Medford. I'm here live every Friday from 5:30 p.m. to 6 p.m. on 103.9 LI News Radio. Your Financial Chick is here to help you make better financial decisions and choices to improve your life and reduce your anxiety and stress about money. If you have any questions on anything we discuss here on the air, check out my website at financialchickshow.com or call my office at 631-758-8691. You can also find me on Facebook and Instagram at Diversified Financial Solutions. So a couple things. So I don't know, today it really was, well, the whole week was a busy week and today was a busy day, but I don't know if anybody caught the sky at around maybe 4:30. You know, we've had some pretty nice skies over the past, I don't know, couple months or whatever, but today it was absolutely breathtaking. And, it's like all those, stop and smell the roses type of thing. We literally, everybody in the office stopped, we looked, we took some pictures of the sky because it just looked absolutely beautiful. So hopefully you caught that. The sky was still pretty good, but, now we've got the darkness and, the beautiful pinks and purples and blue colors kind of is gone right now. But it's good to see that there's some activity here at the airport. So I guess we had that crazy outage this week with there was no planes. There was a shutdown. So just kind of reminiscent to 9/11 where they just literally grounded all planes. That's what happened earlier this week. So we see things are happening. People don't look too aggravated, so maybe they haven't been held up. But I don't know. We'll see. It's been crazy. So it has been some week. I don't even know where to begin, to be honest with you. But I hope you all had a good day. Today is, if you're not aware, Friday the 13th. So you may have known, you may not have known. But I guess really the big picture is overall, how has your year been going so far? I've been talking to a lot of people, a lot of calls. It's a new year. Clients are calling in, meeting with friends and colleagues and everything like that. And I would say most people are just, exhausted already, and it's only the 13th of January. Unfortunately, we're also hearing about a lot of deaths. We're hearing sickness and many other volatile things happening. Last night I was shocked to hear that Lisa Marie Presley, Elvis Presley's, his daughter died last night. She was the same age as me, 54, which is like insane. So that's pretty scary to kind of realize that and to know that that's the case. But we're hearing a lot of deaths, that are due to cardiac conditions or heart conditions lately. When you look at it, you say, could it be like about the food that we eat, the lifestyle that we're leading, or possibly another cause? Two of my clients developed heart conditions after taking the COVID vaccine. My one client actually is working very closely with her doctor to find out if there is indeed a link between the vaccine and heart conditions. Again, this is not saying there is, but she's in her journey, she's met with a lot of people and spoke to people that have had a similar experience. So it's kind of scary. We're hearing a lot of young people, passing out on a field or whatever the case may be. And again, this stuff has happened, but it just seems like the incidences of these events have been more often. But I guess only time will tell, I suppose. So yes, it is Friday the 13th, but I think the bigger issue is the fact that Mercury is in retrograde. Now, you may not be into astrology, and I'm not like a astrology or a crazy person, but it started on December 29th, 2022, and will end on January 18th of this year, 2023. So, but there's definitely something to this thing. Like I said, whether you're into astrology or not, there's something definitely to it. So let me give you a little background on what it's all about. During the retrograde periods, Mercury slows down, and the blue planet overtakes Mercury. So Mercury seems to be moving backwards. But in fact, Earth is just moving faster than usual. And gosh, I think that's how this year started. Everything's going so fast and everything's moving so fast. The day went so fast, so it kind of all makes sense. But here's what happens. So within astrology, though, retrogrades are said to slow down or dampen the realm that each planet governs. So what happens is Mercury is it's basically responsible for communication, and it's also the travel planet. So hear me out on this one. So it's really giving us some idea of why we're having some of these mishaps. So people being a little bit anxious or a little bit nasty, gossip, unsaved computer files, texts that are sent to the wrong person, missing luggage, flight delays and beyond. Perhaps you can relate to some of these things. So that is definitely something that we're seeing in our office. Since the beginning of the year, we've had computer issues. They've been plaguing us almost every other day or maybe daily. It just seems like everything that used to take like 10 minutes to get done takes about 20 minutes or 25 minutes to get done, just because, you have to, have the codes. And I kid around in my office, I say you have to give a blood and urine sample just to get into the financial sites, which is good. We want protection. But it just, everything takes a whole lot longer. And then if you don't remember your password, well, I think you all can understand what I'm saying there. So, and then of course we started the year off with no phone service for 2 hours at the office. That was our first business day back. So, and again, we looked at the airline industry, which I just alluded to it a few minutes ago. They're having their problems. So maybe once the 18th, we pass the 18th, I'm just saying maybe things will move a little bit better. What's scary is that we are so dependent on technology, and when it's not working, we're definitely in bad shape and things don't look so good. So, this year definitely has started off with a bang. We've been super busy and just hearing some weird stories. So, right now at this time as a financial advisor, I personally, I know there's some that do, I choose not to because I like to focus on my lane, and my lane's pretty busy. There's a lot of things, especially with the Secure Act changes of this year, a lot of changes that have happened that are pertinent to the financial planning industry. But now, of course, we know, what are we getting into? Tax time. So I'm hearing some accounting stories. So earlier this week, one of my clients called me because several years ago, her CPA had retired. So she asked me for a referral. So I had referred her to a CPA. And to her chagrin this year, early January 3rd, the letter was dated, that he was not going to continue with the annual tax people. So what I mean by that is that he just wanted to stay with his business clients and not take on individuals that are just get their taxes done, which is most of us, once a year, right? So she was not angry at me, but she was just like, I just want to let you know so you don't refer anybody to him, because he's not going to do taxes for anybody. So, and then there's another gentleman that I just met that I always like to have my colleagues around me, that when my clients come, I can refer them to people that I trust and I know are going to do a good job. And this other gentleman, he said he's almost maxed out. He goes, if you want to send me some clients, that's fine. He said, but I'm kind of maxed out. And what we're finding out is a lot of industries, that's what's happening. I have literally 3 accountants right now that are not taking on any new clients. So that leaves me in a lurch where I need to find some CPAs or accountants that are taking on clients. So I'm sure you're out there, so call me. And also, we've been so busy. We've been pulling together all our year-end numbers and reviewing statements. The office is buzzing with activity. We do letters for all of our clients to let them know how much they put into their child or children's 529 plan. As you're gathering all of your information, if you don't tell your client your CPA that you have a 529, they will not give you the state tax deduction that is due to you. So and unfortunately, you don't get a tax document from the 529 plan. So that's why from our office at Diversified Financial Solutions, we do send letters out to everybody so they can just give it to their accountant and make sure they get all the deductions that are due to them. Along with that, we do IRA and Roth IRA letters. Again, if you don't have a plan at work and you're doing an IRA, you get that upfront IRA deduction. And also the Roth IRA, sometimes accountants want to know and they put that on the tax return as well. But it also gives you the opportunity, because you have until April 15th to max out that Roth IRA. I love the Roth, and it's something that we all should have. And if you're not maxing out, you definitely should do that. The other letter, long-term care contribution letters, have it. You get a contribution, or you get a deduction on the federal level, and being in New York State, you also get a deduction there too. So, and then of course we do a little special letter for our teachers to make sure that they have their deductions and they take them. So it's just to kind of make life a little bit easier. So that's what's been keeping us super, super busy. But we're all collecting our stuff for taxes. So if you have questions, give our office a call at 631-758-8691. And we can help you along with that. So this is the Financial Chick, Denise Nostrom, the company's Diversified Financial Solutions. I help you look for financial solutions when you feel like there are none. Feel free to contact me at 631-758-8691. We are going to be running into the commercial break, but stay tuned. I'm going to talk about the market so far this year and what some projections or what it looks like for the upcoming year. So stay tuned.
Good. I'm going to walk around and get her pass. I'll be right back.
Okay, you got it.
You've got 60 seconds.
Okay, thank you.
You're welcome.
Nice to meet you. Take care.
Thirty seconds.
Okay. Welcome back. This is Denise Nostrom, the Financial Chick. My company's in Medford, and you can reach me at 631-758-8691 or visit my website at financialchickshow.com. Over the years, things change, but I'm here to help you navigate those changes as we go along. And again, I'm always there during your journey through your financial world. We go through different phases, maybe getting married and then buying a house, looking to save for retirement, putting together the college education plan for your kids, helping out parents. We have a lot. I guess I'm in that age range as much as my friends. The sandwich generation where you're helping your children and then also having to assist parents. So as a comprehensive financial advisor, I work in all different areas of financial planning, and it's not just limited to the investments. We take a look at everything about your situation, from budgeting to making sure, looking at your taxes. I don't do taxes, but looking at your taxes and making sure that you're getting all the deductions you're supposed to be getting, and that you're maximizing any tax benefits that you have. So what I'm going to talk about now is basically how the market has been doing thus far this year. So of course, we've only just begun. It's only 2 weeks into the year, but everything has been up, which is good. It's nice to see some green. I get this weekly sheet, and it's been a sea of red for pretty much most of 2022. And it's nice to see the new year, new start, fresh start, even a fresh start for the market. So everything is kind of starting off pretty well. So the S&P 500 through last Friday, because this comes out every Friday, was up 1.5, closed at 38.95, so it's 39.99. So it definitely added more, or appreciated more this week, which was good, and all of the indexes did. As with the Dow Jones and S&P, they're kind of running neck and neck this year, both up about 1.5 to 2%. NASDAQ, which is your tech heavy, index, is up around, that's up about, they're all about the same, about 1.5 to 2%. So that was up this week as well. One, I guess, notable increase that we don't really want to see, but unfortunately, I don't think we're out of the bad zone yet. Oil was actually up 2.12% just this week. Just today, and it was up 8% this week. So that's something I know my husband and I were sparring over it, because I at the end of the year, I told him, let's lock in our prices for our fuel oil for the house, or the oil for the house, I should say. And then of course the prices came down. Like I said, I don't think we're out of that range yet. I mean, if we have China opening up and the demand for oil goes up, we may see these numbers go up again. I don't think energy has seen its high, it's down, but I don't know if it's going to stay down for the long term. So that will be something we'll have to check out. So I always take a look at the sectors, kind of see what's going on. So the top 3 sectors this year, which is very interesting: communication services, which would be like your Zoom calls or your cell phones. That's the best performing sector this year, followed by materials, which is, like if we're doing improvements, let's say on the roads, the materials would be the asphalt, and then industrials is another sector. That would be like the roller that would roll the asphalt. So we have communication service 1, materials number 2, and then financials is number 3. And that's not a shocker. When rates go up, financial companies do better, especially banks. When you think about banks, right now the Fed funds target rate's at 4.5, so they're being super generous, right, and giving you those great CD rates. So the CD rates have gone up, which is great. But if you look at your savings account, it's pretty much stayed the same. Like they're still only giving you about 0.1%. So now when you think of the money that they're making there, let's be generous. Well, we'll say 0.1, and the Fed funds target rate's 4.5. In all aspects, they're making 4.4% on your money. So, the CDs is just a way that they're giving back a little bit, But financials will do well because rates have gone up, and, because they could do that. Look at the credit cards. The APRs, the annual percentage rates, have gone up. They're allowed to move them up now because the Fed funds target rate went up. So financials is a good place to invest at this point. Bottom 3, we have information technology as the 3rd worst performing sector, and that's kind of interesting. But one of the reasons it's still trying to get over the hurdle. We had such an uptick on technology in 2020 and 2021 that it's cooling down now. Energy actually is flat this year. It's the 2nd worst performing sector, and the worst performing sector so far this year, again just 2 weeks, is healthcare. So kind of interesting stuff there. We're seeing some green finally in the bond market. However, the Fed is still saying that they're going to raise rates probably another 2 times, even though this week we've seen that inflation is cooling. Again, most of that inflation number was gas that has come down. We're still seeing ridiculous numbers with regard to what we're spending at the supermarket for eggs, for lettuce, and everything like that. So that hasn't changed. So and inflation is the core inflation. Well, this is a lagging number, but we still got an inflation problem. We've got an employment problem. They're saying that it's good because the employment number is so down. It's only 3.5%. However, people are not working. The participation rate is so low. I think people are starting to get back to work, which is something that's super, super important because, there's a lot of programs that I was talking to clients this week that, it sounds all great that, I can stay home or I could do this or not work or work part-time, but then we have the other side, people that are retired, that have Social Security and Medicare. And if people aren't working to put into the system, and a lot more people are taking out of the system, it's not that we're, discriminating against older or younger people, but the fact is it's just a numbers game. If you're not putting in, enough and people are taking out more, well, it just doesn't work. And speaking of that, right before I came to the show today, Treasury Secretary Janet Yellen just came out to say that the U.S. is going to hit its debt limit on January 19th. So that's incidentally, which if you were listening to the beginning of the show, the day after Mercury retrograde. So I guess it just never ends. The fun never ends. But so we're going to hit the debt limit next week, which they're talking about setting up a showdown between the White House and, of course, now the Republicans that run the House. So they have vowed, the Republicans, to tie any increase in the debt ceiling to spending cuts. And it was funny, the article that came out, they made it as a negative connotation, but I'm thinking that's a good thing, right? I mean, because just in our own personal lives, if we are spending too much and we have credit card debt, do we just continue to, spend and make more credit card debt? And maybe some do, but I think most of us who are rational wouldn't do that. So so hopefully we'll see some good things there. So the nation's going to reach its $31.4 trillion borrowing limit on January 19th. So they're saying that they're going to be implementing some extraordinary measures to manage the government's cash flow if lawmakers don't act to raise it. So it just seems like there's constant infighting, constant drama all the time. But what happens is if the debt ceiling isn't raised and the government goes into default, essentially they can't pass any bills, which may not be a bad thing, but it also could be disastrous for the American economy and global financial markets. So some things that could happen, again, I alluded to before, seniors could stop receiving Social Security payments, U.S. Military service members could stop receiving paychecks, public health funding could stop, the nation's creditworthiness could be downgraded. Spiking interest rates would raise mortgage, car, and credit payments. That's already happening, but it would get worse. So we've got a lot to unpack over the next couple of weeks. And, then, of course, that's all. I didn't even want to get into this, but I'm just going to allude to it real quick. The debt limit, but then, of course, the Biden debacles. It was very interesting. The last administration, we had some situations with classified documents, and he came so boldly out saying that, well, that's terrible and that person, he should be reprimanded. And now it doesn't seem as a big issue now that Biden's doing it. So I guess we'll find out how that's all going to play out. But it certainly doesn't give the market any good feels because, when there's volatility and there's, erratic behavior, especially in the part of our government, the market will tend to get a little jostled. So hold on tight. It's probably going to be a really, really interesting year. We'll probably be okay for but it'll be crazy for the first 6 months, but hopefully the latter part of the year we will level off a little bit. We shall see, but I'm here to bring you all the news that's fit to print, I guess so to speak, and keep you updated. And like I said, a lot of changes have happened this year, so if you're not working with somebody, definitely give a call. Work with me, the Financial Chick. You can call me at 631-758-8691. Have a great weekend. I'll be with you next week.
Good job.
All right, thank you. Have a good weekend, y'all. Take care. Bye-bye.